Hey everybody, happy Friday. Welcome back to our Think Scripting class. My name is Mike Fairborn. Looking forward to more coding on ThinkScript today. Wanted to take a look today actually about the concept of divergences. And actually not one divergence, but two divergences, or even we could do more than that. Really focusing in on a double divergence type scan today that would pick up on different time frames that we're seeing within given stocks that, we're seeing the strength of, let's say, the RSI and the MACD, and we can vary whatever indicators we're looking at, but seeing the possibility of divergence behind the scenes as that stock is performing. So I look forward to taking a look at that with you. I'm joined in the chat today by Scott Thompson. Great to have Scott on board, who is a co-manager with me and over me, I should say. Not with me, but over me. And great to have him here. Folks, any questions, comments you have, definitely throw those in the chat so we can help address those for you. Would like to say welcome to John, Robert Boucher. We've got Chris, AJ, Will, Ocean, Cedartown, Rocky, and Ocean Life and Lola, folks. Good to have you on board. Yeah, please definitely know, any questions you have, throw those into the chat box so we can help address those for you. I'll look forward to our discussion of breaking this down specifically for you here right now. So let's get started with some disclosure items to get the show on the road. As it states here, information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application is for educational purposes only. Backtesting results presented are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. Okay, investing does involve risk, including the loss of principal, and past performance of any security strategy does not guarantee future results or success. So having said that, let's go ahead and just jump right back in to our charts here. I'm going to dive into a couple of different areas quickly here. In fact, what I want to do is, let me just do this real quick. I was looking at a couple of different indications here, and I wanted to pull up our S&P 500 index right there. Oh, if I could just get this to drag. There we go. Perfect. Okay, so there we go. We're looking at the S&P 500 index here, and yeah, just taking a quick peek at the highs of the market right here, coming off a prior high a little bit ago. Well, I guess it was last week, right? We hit a high, 1, 2, 3, 4, 5. Yeah, so we hit our high. That was an all-time high right here. We've bounced back after that deep seek gap down early in the week, and we've come up higher. Now, what I want to talk about today were some of the common indicators that investors, traders will use around divergences. We've gone into some detail in the past on divergences, but I've got a way in looking at this over the past week actually to enhance it using what's referred to as a fold code, which looks back at a number of different iterations. And actually what it will do is go back over a particular indicator, and it will look over a time frame that we give it, and it could be between a different time frame. I chose like 5 to 21, 22 days in our discussion today. But what it does is it compares the underlying indicator itself, RSI, for example, in this case, to the price, and you can see that price would be of the S&P 500 index up top. So it makes a comparison between the two, but it looks at it over a time frame and says, how many times did the RSI make a new high? High, high, high. And how many times did prices not make a new high? Okay, in other words, it was either equal, the price was even, it wasn't making a new high. Over the time frame that we're looking at, it was either an equal level or it was lower. It was a lower high relative to the price itself. And so it's fascinating. It's an interesting component. Previously, we were just looking at one simple bar, and we were just saying, because that divergence is working to a degree. We were saying, okay, look back over the past 14 bars was our last code that we looked at. And we said, with that past 14 bars, how did we do on our current bar? Is our current bar up? And the underlying stock that we're looking at or index, is it down? You got one up and one down to try to find that divergence. That's all it was. Now we can find, 3 or 4 or many different points in an indicator that are going up relative to the underlying stock or whatever we're looking at going sideways or down. Okay. Uh, so a real quick brief on that. I wanted to bring that up because we did have a topic request a little while back. I'm trying to keep up with those. You guys have got some great ones, but it was just so cool to be able to enhance that a little bit with that fold code. So just to let you know, we're going to talk about that in detail. Wanted to kind of throw that out up front. But a real quick just primer again on divergences. Folks, this would be up top here, not a positive divergence. This would be a negative divergence. We're going to be looking at today are positive divergences. Okay, we're looking at those where the price of the indicator at the bottom is making a high, but yet the security that we're looking at, stock or whatnot, is not making a new high. It's making a lower high, for example. This represents the strength of the underlying indicator. Let's take a look at it right now. Let me just show you, and we can look at divergences across different time frames, which is really interesting. Let's take it back just all the way back here to, let's see, the first of, well, really kind of close to the 1st of December. You can see this high over here. If I drew this line across the top of the RSI over here, right, you'll notice that prices did make a new high. But the RSI itself, the RSI Relative Strength Index, common indicator, did not make a new high. In fact, it was a lower high. That suggests, all else equal, that is, weakness. Now, that's looking at this over the past, over more than a month, right? Basically close to really a 2-month time frame here since the first part of December, really. But sometimes you can look at it even short term as well. Let's look at it short term. What do we have on RSI up top here? What is the RSI possibly foretelling us relative? I'm going to show you. So RSI, if we compare that RSI, I'm dragging it up here relative to price. Look at prices. Well, we're right at that high. We've actually been, over the last 4 days, going up. What's our RSI doing? It's actually going down, showing a form of weakness. The thing is with indicators specifically is they can be leading to price sometimes, and you're looking for underlying strength and weakness. You can see over here that I'd actually drawn previously. Actually, this was a triangle here where the RSI broke out early. The RSI broke out down here. Let me just check this off real quick. RSI broke out down here higher, suggesting a move to the upside, whereas prices took 3 more full days to get higher before you had a trend line break of the price. So that's why indicators can be of use, and knowing and seeing what those indicators are doing, I mean, that can be really, really quite informative, right? Are we breaking new highs or not? Or are we not making new highs? This right here is what you'd refer to as a negative divergence. You're seeing a high price come in, and but you're not seeing that on the RSI down below. We can look at a number of different indicators. The code we're looking at today, we can substitute out RSI, MACD, whatever the case is today. Really, the whole idea is to create a scan, which I've actually already done, but then provide a double, okay? A double divergence, DIV for short. Divergence is a long word. Double divergence. So let us know what has been happening over the past period of time, and we'll go through that code a little bit. But we want to see not just the bar going up, the current bar higher than price over the past 14 bars. Over our time frame, using a fold code, we're going to be looking at about 5 to 22. I put it out 22 days. So I was actually using 21, 22 is like a month's worth of trading in terms of bars. If you generally look at it, it mirrors, that's what we're using here in ThinkScript are the bars. And so really the whole idea here is kind of taking a look at this time frame and saying, okay, over the past month, 5 days to a month, so really 1 week to 1 month, we had to have had at least 3 divergences, and it is so much better, such an enhancement over the prior code that we had used, I don't know, 4 months ago or so. But using the fold code can do that. So I want to dive into that a little bit. Let me just take a quick look at any questions that might have been coming through. Oh, let's see. Yeah, Ocean Life, maybe a script for a future class. You know what, Ocean Life, to your point there, we actually did one on pivot points, prices breaking up above a pivot. So the code is that you had to go below a pivot point, but then break back up above it, much like many traders will use for a code. I should say a method for trading pivot points. In fact, let me just see if I could pull that up real quick. If you could bear with me just 1 second, I'll pull that up and save some time here while I've got it. And let's just do this real quick. Because what I've got here is well, you've probably seen this before. This is the playlist. I was just going to highlight where that one's at specifically. Let me put this playlist in for ThinkScript already down here. So you've got it right there. That's the playlist. Let me just double check. Yeah, that is the playlist right there. Scoot on down and you'll find in here, see right here, divergence code. That was when we looked at, we were using an old divergence code even a month ago. We were still, although we were doing something different, it's an enhanced divergence code today. But specifically, hang on a second. Sometimes if I'm instead of just scanning through, you might have to look through this and just find it. But, oh, shoot, I'm sorry. Let me do this, and it does it. Plays it. If you just go Control F, pivot. Okay, where is the pivot? Right there. So there we go. So this one right here, and what I could do is I could just copy that link. Copy that link. Copy image, no. No, right there. Copy link address. I'll put that in the chat too, but that would be one we did specifically for futures. Now, if there's other ones you wanted to look at with other futures type trading tools, definitely, let me know. I will go through, I might miss it though in our comments today, but I always go back through and read those for any additional topic requests. Okay, so with that, let's add one more in here because I wanted to show you. In fact, let's choose a stock, maybe one you've heard of before. There's Apple. Now, Apple, I'm going to be using a couple of momentum indicators today. What I wanted to use was the MACD 2 line as well, which is kind of a signal amplifier. Let's talk about both of these indicators just quickly so we're on the same page as well. But first of all, with the RSI, remember RSI does look at closing prices and it compares the closing prices from day to day over the last 14 bars. That's what that 14 is there for. The 70 and 30 just represent overbought and oversold ranges that were originally introduced in 1978 by Welles Wilder himself. But with the RSI, we're simply just looking at closing prices. So the close on a percentage basis over the past 14 bars. That's what the RSI does. And so it really stands to reason if a stock is showing strength. This one broke through a trend line, was going higher, but you're really looking at strength in here from bar to bar to bar to bar. Is that strength picking up or not? Come down here and take a look at it. The RSI, the closing prices were picking up some strength. Now turning to the MACD, just so we can give a little bit of airtime for each of these as well. I think many of you understand this, and there are ways to learn more about the indicator. Obviously, you can read about it and look at the math behind it too. But on the MACD 2 line is the one that I look at specifically. Let me just explain what's going on behind the scenes here so we know what we're getting a divergence on. We're going to be looking at the same divergences, though, when we look at the MACD relative to the RSI. That is just simply higher highs, higher lows on that MACD relative to what price is doing. Apple is not one that came up on the list. I just happened to throw it out here. I might have to zoom back into another area to kind of show you some of these divergences. In fact, I can see one right here that's very clear. But before I do that, real quick, what is the MACD? The MACD 2 line, you can see that there is the 12, the 26. These are the two main lines. Okay, they're exponential, I should say they're exponential moving averages is what they are. There's a 12 and a 26. And when the 12 period, if I were to just draw this on the chart, I'll try to use a little bit of color coding here, but the 12 is going to hold price much closer, right? An exponential moving average. But then you've actually got a 26, which is going to lag. Now, the distance that you're going to have between these two lines is the convergence of the divergence, and that's going to help to control the price movement of the main line here. Okay, there's also a moving average, a 9-period moving average on top of the convergence and divergence, which is the CD there, moving average, convergence, divergence, of the 12 and 26. And that is the 9-period. And a lot of times what I do with that, we've talked about a signal on that, but if you just come over here and turn this into a 1, we're simply just looking at the 12 and 26. Oh, I'm sorry. Yeah, no, yeah, that's the average. Yeah, we're good there. That's exactly what I wanted to see. Yeah, we want the 1. I'm just trying to eliminate that moving average for now, just to kind of highlight the line that we're focused in on here. Okay. And so this is the convergence and divergence of the 12. And basically, MACD is a signal amplifier. It amplifies the signal of the underlying price. And this same technology is actually used, or I should say, the math is used behind signal radio towers. As you read into it, you can find out a little bit more about it, but it can be just a signal amplifier. Are we showing strength early? If we're showing strength that's starting to be built up, we're going to see the MACD leading the price. That's a divergence. That's part of our double divergence discussion today, where we're going to be getting both the RSI and the MACD diverging ahead of price action, so that perhaps there might be a snap back in price. Price might shoot up, perhaps, if that were to unfold. Let me just show you this time frame right here on Apple, and I'll kind of highlight this for you. If I zoom in too much, it's not that great. Let me just go to a 2-year and show you an area where this was unfolding. You notice that we did have a fairly big decline over here in prices. I'm going to go right here so I can see it a little bit better myself. But right here, prices were making lower lows and lower highs. And a lot of times, these divergence indicators are going to help maybe spot more of the bottoms as opposed to the stronger trends. They might be maybe the longer term bull flag reversals, kind of like maybe a weekly bull flag that's come down for a longer period of time, but is really showing some interesting, double divergence on this pullback, so that you might have, a longer term trend on the verge of unfolding to the upside, question mark. That could be something we could be looking at there. Okay. So that is kind of what we're focusing in on here. If you take a look at this with me, I'll clear this off and we'll start back over with our blue line here. That is Apple after an existing upward trend, making some pretty decent lower lows and lower highs. Now, right around this point right here, although the price of the stock did continue on lower lows, and moderately lower highs right here, up to this earnings point right there, notice what was happening ahead of that earnings. Look at the RSI. In fact, to do that, what I'm going to do is I'm going to draw in here. Let's do this. I'm going to grab a drawing tool right off of Thinkorswim. Now, what we want to do is go over here to the diagonal line and just start off the bottom. And I know we're looking at this in hindsight, but we could also use it in foresight, because something like this would certainly unfold in foresight like it did at one point in time. RSI was showing some really good strength. Look at the RSI going higher, making higher highs and higher lows. Let's do it one more time. What about the MACD? Right around the same time frame, very close to it. Although these are totally different indicators with different math, completely different math, they both had some pretty significant divergences right there. Positive divergence, 1 and 2, double divergence. DD for short. That's a lot easier to write in. Okay, so double divergence off that bottom. What we're trying to look at today is a code that will help us to spot this when it comes up. Okay, now it might spot it a little bit early. It doesn't have to be the bottom, of course. It's hard to know what the bottom is. Sometimes you can see they'll bounce around earnings, but it could be somewhere in here. At least you could have eyeballs on it while you're getting this massive divergence that's happening over a month, month and a half, almost 2 months here, right, over this time frame. Now, why is this so useful? Well, we talked about why the indicators could be really, really helpful in terms of giving us some insight if we're seeing indicator strength ahead of price strength. Talked about the possibility of a big flag pattern, weekly scale, unfolding behind the scenes. I mean, that's something you'd have to look at yourself, right? You could look at other indicators as well. But as you see this unfolding ahead of earnings, this is what this is what sometimes these tell me is that RSI and the MACD are picking up on buying strength that is hard for the naked eye to see relative to what we're seeing, which is visually. Okay, so it's picking up on more strength as opposed to more weakness in the downward trend. You might be able to see that if you stop and look at it. This trend did begin to slow down a little bit, folks. What may have happened is there could have been some big players in here. We don't know, but there could have been some big players in here waiting for that earnings announcement right there. They thought things were going to be different. And that's what happens. Sometimes the smart money, so to speak, quote unquote, the smart money will start to buy in early. And they'll start to buy in, and all of a sudden you're going to start to see changes occur in the form of divergence. The indicators will start to make good, solid, long progress in terms of upward trends ahead of a possible bounce. This right here, though, I have to say, after an earnings announcement, I don't know, has anybody else, I can't say by a show of hands, but has anybody else ever seen a pattern like this? Prices coming down, lower high, lower low, and you're just kind of bouncing here, and all of a sudden, boom, earnings comes out, and you clear all those highs. And what can happen? What can happen next? The trend can begin. So that's why I'm so excited to talk about this fold code, I should say. The fold code. All right. Oh, thank you, Scott. Helping out in the chat quite a bit here. Folks, if you like these kind of presentations, by the way, definitely smash that like button. It helps the presentation. It helps me know that this kind of content is valuable for you too, and really so easy to do as well. Smash that like button. Bottom right hand corner of the screen, just hit that subscribe button. Love to have you on board if you're not already a subscriber to our Trader Talks channel. I don't believe we have a survey in the chat, but I'll keep an eye on that in a little bit as well. But let's move into the code, shall we? Okay, so the code itself, let's go ahead and pull it up. I've created it right now as a scan, and what I can do is I can create, I'm going to scan this right now, the NASDAQ 100. We should have the same number, but no, oh yeah, so roughly just under 10 right here, stocks that fall up into this list. And let's break the code down. We'll take a look at it right now. You can see we're defining the RSI and the MACD. Let me just show it to you first. Let's look at the results, and then we'll dive into the code, okay? So here is that RSI. So we've got Adobe. First, there's only really 9 out of 100. You can see it up top here. I am in the scanner, and we are in the stock hacker. This is the code, and this is what we're scanning in. Very, very, very important what you scan in. We're scanning in some of these companies that might have been around for a while. These are the NASDAQ 100 group of companies. I mean, you probably heard of many of these names, but this is Adobe. Okay, this is Adobe coming down here. Now, I've got to zoom in. Let's zoom into a shorter term time frame. This is our pullback on Adobe here. And let me just highlight a couple of points that we might be seeing here. Now, what this indicator, what this scan is doing, the code specifically, is going back over both of these indicators. Let's just put it under here. This is for both of the indicators. 5, it's looking back at least 5 to 22 days. It's looking over a range, okay? So we're folding the data over a range, and we have to have at least 3 hits where both of the indicators had to have gone higher while prices did not. Look how well it spots this. This is fantastic. This is a great example on Adobe, just top of our list right here. What do you see over here? That is one of the highs before we dipped on price action, right? Let's draw a line right through that, off those tops. We got close to it, but we did not quite break above that level yet. So it's still showing, resistance at that level, potential resistance right there, right? But let's go ahead and take a look at the RSI now. Look at the break. The break, folks, came way, way early. I'm using the same high range on price. So again, so I don't lose anybody, we're looking back over a period of time, at least a month back, and we're looking for indications of that. That's a high. This is actually a high. That high um, translates to, I should say, is relative to the highs down here on both of these indicators. Let's go ahead and draw a line across here as well. What do you see? Did we break above both of those high lines? I mean, this does not happen all the time, right? Especially if you're getting a double divergence. But we got the break right here. I'm gonna do the best I can just to try to push this up. And so you can see where we broke above those highs potentially early. We're all the way down here on price, but yet the price action in terms of slower, I should say, percentage closes that are not as great to the downside and percentage closes that are higher to the upside, which is what the RSI measures, blew it out of the water. We're way high over here now. That's a huge, huge difference. Prices didn't even break above this high, but yet both indicators, 1 and 2, did right there, 1 and 2. The MACD was almost even, well, it's about the same time. That high right there. I just try to draw a line straight from there. Oh, it's close to it. I'm all over the place, but you get the idea. It happened way early in sort of this move right there. That's what this scan can do. Just like we saw on Apple, we went back in time. This is giving it to us up front. Let's look at a couple more and we'll go from there. Let's see. I haven't even looked. Okay, so AMD. AMD's been down, I thought, but that's okay. I mean, are we looking, is there a possibility of buyers here? Can we look and see if there's going to be a change in trend? There's AMD. Okay, somewhat similar to what we had seen on Apple, as you recall. And by the way, we are creeping up here to earnings. What's earnings going to show? Look over here with me. Lower lows, lower lows, lower lows. RSI. Hang on. Let me do a different line. RSI going up. I've got to get a line that there's no way, folks, on this keypad with this mouse, I'm going to be drawing a diagonal line that you can actually recognize. That you can see, though, is going down, correct? Prices are making lower lows. In fact, right there. Trends are down. Look over here with me at this point. RSI, up. MACD, both up. That is what we've tried to design today as we've enhanced the divergence indicator. But once you can figure out the code, shoot, throw as many as you want in there. Remember, this particular code had to have both the RSI and the MACD both come up, right, at the same time. So we had to see both of them in order for this to divergence, positive divergence on both. We could make negative divergences, but it's going to have it on both in order for this to show up. Now let's go into the code right now as we're getting into this a little bit more. Okay. Go back to our scan. We'll pull it up right now, and I'll go ahead and share it too. Remember, all things scripts are not guaranteed for timeliness or accuracy. In fact, they're just following the information that's being, I should say, the data that's being fed into the platform. As long as the data that's being fed into the platform is, it's good data, I don't think we have good data, then, we should be getting the results that we'd be looking for here. All right, but let's do this. We'll go ahead and share the scan query right now first. Yeah, this is going to do it. Is this the scan itself? Yeah. No, it's not. Yeah, it is. I'm sorry. This is the one we've got up. Okay. All right, my head's still in the code here a little bit. Been working on it a little bit. There is the scan right there. Okay. Let's break it down so you guys can see what's going on. And we'll talk about that fold code specifically. Now, up top, within this code, as you can see, and this is going to be really important to keep an eye on up here, because if anytime you wanted to change out one of these indicators, you can do that up here. The code is versatile enough, and this is it. This is all it is right here to see it. It's shorter because we're actually using this fascinating fold down here, which we'll get to in just a second. But you can see up top, I've got my RSI, I've got my MACD, which matches exactly what we were looking for. Now, it has this signal line in here. Basically, we're just looking at the divergence of the mainline MACD, which represents these two. Okay, that's already within the code, just so you know. All right. Now, a couple of different points. Some of this data we've gone through before in other codes, but let's just get to the core of it right now. In terms of the input, as you can see right here, that's the minimum length we're going to be looking back. And that's going to be a very, very important point as a look back period, because we're going to be tapping in to this minimum length right down here in the next code. Okay, so what we're going to do is we're going to look at the minimum, the look back range, and the minimum length is 5 bars. Okay, you can adjust this if you want as well. So all of this stuff is adjustable. Shoot, like I said, you can even adjust the indicator if you want, right? But it goes between 5 and 22 days. Now, as I mentioned to you, I did want to have a minimum number of divergences that occur within this time frame. So the first thing we have to do in terms of an input is we have to define each of these, set them up with exactly what we've got here in terms of identifying what they are, the minimum length, maximum length, and the number of divergence signals right here. So there's 3 of them, as we discussed. Now we're going to get into this fold code. And let me do this as I share the fold code. I'm going to go ahead and show you where you can get some of that information. It's this one right here. So it's under ThinkScript. And if you go into ThinkScript, let me post this here too. This is where you can really tap into some great tools. I mean, if you're learning ThinkScript, it's a great way to do it. You can actually learn from some of the coding that I've done or some of the existing coding in there. As long as you start swapping things out, it can be pretty straightforward too. Once you get once you get used to what you're after, kind of like as we talked about last week with the fractals, now you have some ideas on how to, set code for like price bars over a time frame. This is just code for potential divergences. Okay, now diving into fold, I'm going to type it in up top here. Click on it down below. Now, what the fold does specifically, it's actually still turning. Okay. While we're waiting for it to come up, so like a lot of programming code, I'm familiar with Python, okay? And if you're familiar with like traditional loops that loop over a period of time, ThinkScript is a little bit different. It looks for what's called a fold. I'm sorry it's so slow right now. You can see it's still working on it. But this is where you would go anyways to pull this up. And it should come up here in a second. It basically just looks at, though, a range of values, a range over time. Since it's not up, I'll just, okay, forget that. That's so weird, it didn't work. I wonder why. I did it earlier. Now I can't even go back. Sorry. Okay, well, let's just go back to the code. What it does is it looks at a look back, but that's where you could find it at least. Just type in fold there under that link that I'd sent out to you in the chat. Okay, so as you can see up top here, we've got a divergence count up top. Now the fold itself, it's referred to as like a recursive aggregation. In other words, it allows you to iterate or define repetitions. What's the repetition? The repetition is going to be divergences that are occurring over a time frame. What's that time frame? We've got it lined up right here. In fact, the beautiful thing about the code is you can point to it and it highlights other areas within the code that you've got it where you're referencing that same information, right? And so what that does is it looks at a range of values and it accumulates those values. Did we want an accumulation? We did want an accumulation, and that's exactly what fold does here for us. So it accumulates it, and it sets this up for us. Now, the I in here, and if that ThinkScript would come up, I could have highlighted everything here, but basically, that just defines kind of like the loop variable. It starts at a minimum length and a maximum length, and it creates the increments throughout the whole process. So it puts forth and sets up the counting as you're getting up to 3. It's not that bad once you actually get the code all out and lined up, but I wanted to kind of highlight some of these areas. You'll find more details on it, though, under the ThinkScript itself. Okay, but anytime you wanted to have more or go back over a longer period of time, you can certainly do that as well. You can jump back here and take a look at longer time frames, or I mean, you can alter RSI, whatever you want, but specifically I was referring to like minimum length and maximum length. But this is really fascinating because the code right here says get me at least 3 even if it's over a week time frame. It can be a week, it can be up to 22 days. We do not count beyond the 22 market days. Not calendar days, but market days. And so as long as we can get 3 double divergences over, between 5 and 22 days, calendar days, then we will get a positive indication. Okay, there'll be a true statement. It will show up on our list over here. I want to actually run it for the S&P 500 as well. You'll notice over here that our divergence count greater than or equal to the minimum number of divergences. In other words, it has to be within that time frame, and that's all I've defined just at the last piece of that code right there. More details, though, as I mentioned to you, under ThinkScript specifically. Okay, let's see. I'm going to go ahead and show you. So, the nice thing is once you get that code, you can go ahead and just throw in a bigger data set if you wanted to, S&P 500. And by the way, this code, folks, if you're not seeing this live, if you're watching this on a recording, I will have that code listed for you. I will save that link just so you have it under the description section right below the video. And then you just want to click on more, and then just down below there, we'll have the code. Sometimes I'll have codes from past classes as well, but that's where you can find it. And then just you can paste that right into over here. If you're, well, once you save it, you can find it under the studies. It'll be a study that you'll have listed. So you can have that under there and pull it up. And, and it should be there for you. Then you can just save it if, in fact, you want to reload it back up. It's the second action icon down here, obviously, to load those studies and pull them up. Okay, well, let's go ahead and take a bigger data set. It does take a little bit more time because we are referencing both RSI and MACD divergences over that window that we talked about, 5 to 22 days. And there's got to be at least 3 of them, according to our code. Let's scan it right now. And you can see that actually, I think was it loading? It might have been loading as I let it sit there, but that pulled it up actually quite fast. Okay, and here are a list of those companies. Now, just out of curiosity, I want to take a look at Freeport-McMoRan, which is a copper. There are some analysts out there that are suggesting copper might be quite strong this year. I'm curious. I think Freeport-McMoRan is like 80 or 90% copper, 10 or 20% gold, whatever those percentages are. And you can take a look at it over here. Okay, look at this. So clearly, now this is interesting because you can get this is a great example. You can get positive divergences here off a couple of different fronts. Okay, look down here on that MACD down below. This is not a new low. It's clearly a higher low. So those 3 iterations that we saw over the range are starting to show up. We're not finding an exact sort of like pattern down here at all. We're just saying because there are 3 or more iterations over 5 to 22 bars, we might start to pick up on some of this stuff. Look over here with me. Did it do that over the past 22 bars? I could see on the RSI, folks, look at this. I mean, that is something significant happened here. I do see, obviously, a dip down. We came down a little bit lower, not on earnings. So we're still going lower. And again, this is not a guarantee of success, but this is a way that some traders will look at and saying, hey, I'd like to try to see if I can get these indicators showing something that they don't show very often, especially both of them at the same time. Okay, so it doesn't have to happen, but could there be a recovery? Could we be keeping an eye on the possibility of a trend line break right there? A trend line break for a larger move on a commodity, if in fact copper does fulfill and run higher. That's a question mark too. By the way, so too is the trend line break at this point, but could have eyes on it. It could be interesting at this point. What I wanted to show you on the RSI, folks, that was the prior high. We made a new low down there. That's your high right there. Look at that. We broke it. We smashed above it on this bar, even though we didn't get too high. We were probably waiting for earnings, and earnings didn't go as planned, I guess. I mean, it did dip. Market obviously dipped, but look at the size of the high on the RSI relative to the stock price. I mean, we broke higher early, which is the positive divergence. It's the early warning sign of that RSI. Price is weak, RSI strong. MACD, a significantly higher low right now, even though we do have a new low on the stock price. Okay. All right. Any questions on this? I think it's a really cool tool that you guys can use, especially, with that ThinkScript fold concept. The fold is so nice because it like I said, it looks for repeating values that can be accumulated over a period of time. 3 double divergences over 5 to 22 bars. It's a very small code. It didn't have to be too big because of the fold code itself, the fold input, fold function, right? There you go. All right. So let me just take a look quickly down here, see how we're doing. Scott, I really appreciate it. Helping out quite a bit. Let's see. Let's see, is the code okay? So the code is to give an implied direction. Isaiah, exactly. So yes, it's an indication of a possible stronger move in the underlying. The stock could begin to bottom. For example, we might be seeing accumulation of the shares. Got a couple of different momentum indicators here. It doesn't have to happen, right? Nothing's 100%, but it can give us a little bit more confidence because some traders would look for that. But I mean, think about this, Isaiah, and everybody. How long would it take to go through all of these companies and just looking at double divergences across the board? And there are quite a few in here that we're seeing. One thing I would say that is fascinating is we have seen like the SPXEW, the equal weight. This is just an index, SPXEW, EW, bounce back sharply, and this is an equal weight. And what we had seen over here, this is actually following in line. I mean, we saw some strong moves over here. But one of the things I looked at in my class on Wednesday, which is we're looking at market and sectors, we just broke down specific sectors that were showing recent strength and stocks within those sectors. Okay, and because this had been down for a while, we had a lot of value and income stocks doing this for a long time. And so now an indicator with a double divergence indicator, right? If you saw something like that in some of these other groups, because a lot of these companies, I mean, they have been down for a while. I mean, I'm looking at, just the sub industries here. Many of these have been, they've pulled back a little bit, which kind of ties into the possibility that there could start to see divergences if there's going to be a recovery in that group. All right, well, good. Hey, AJ, that's the idea, giving you guys some tools to use in terms of ThinkScript and how you can use it for other sorts of trades that you might be having, maybe other indicators you want to look for divergences on. But a good way to do it quickly and really be a huge time saver to kind of narrow down for you a lot of these different areas, okay? But yeah, I don't have that. I did not create a column scan, but I could actually do that, Bob. Yeah, that could be something I could share, next week. In fact, actually, let me do this. If you guys are able to check in maybe over the weekend, well, no, I have to get it going. Let me see if I can get that done after this class. And then when it posts, it goes through a process of posting. I should be able to have the column down there for you at the bottom. It'd be for the same sort of scan though, 5 to 22 days as well. All right. But hopefully, folks, I've generated some ideas for you and hopefully a tool that can be effective and useful for you going forward. I'm looking forward to, taking a look at it and finding some divergences. It's one of the things I do look at with indicators specifically are divergences. So, Thea, this is only for bullish. So this is just positive divergences only. We could make it for a bearish trend too. The markets are up right now, so we're just looking at the positives, maybe riding in line with the underlying trend of the market. That was kind of the idea today, focusing on a positive one. Actually, the idea earlier this week, it took me a while to build this. But having said that, guys, gals, great to be with you. Folks, smash that like button if you like today's presentation. If you found something useful out of it, so easy to do. And then just hit that subscribe button. Thank you, Scott, for your help in the chat, as always. when you are here with me. Folks, have a terrific weekend. It's great to be with you. Take care.